Hey guys, welcome to another video brought to you by Total Control Traders. Today we have 12 tickers to go through and gonna try to bang them out and make sure that we're keeping it to the key focus, which is the market right now for you guys. Right, let's get right into it. First one, SPX. What a day. What a day. Alright, so for the last few days, 5 days, as mentioned in my previous videos, we have hit the 1-to-1 extension target, which was a tracement from back here, this lower low, lower high to the higher higher low. Okay, 1-to-1 extension, and we clearly saw the stall there for the previous 5 days. Now we are seeing a significant pullback. I would call this significant because it is the first lower low that we're making ever since October 31st, and we have ran for 60 days up until today, exactly what I said in yesterday's video. So where are we going from now? Well, first of all, this is a clear close to a lower low. We're going to need a lower high as we are dropping relatively fast, and now we're trading a little bit far from the 88, not extended, but a little bit far, especially considering the 1-day drop. GP is right below where we are. The GP from this notable low up until the high. So GP is right below. Bulls, if you have not exited your position yet, the break of this GP is a must exit. The target where I'm looking at, and I've looked at this based on quite a few different zones. First zone is going to be around here between 36.33, 36.51. That is close to the 0.382 of this whole bull run. Okay, ultimately still looking at this same target, the zone of 35.88 to 35.41. That'll be the zone that I'm watching, which lines up with a 0.5 pip retracement of this whole move. If we do hit there, we might not, as there is a all-time high trend line that's in confluence with the 0.382 as well as the zone before this. We could very well just bounce from the 0.382. But if we do come back down to the 0.5, we'll be looking to go full bull. Market anticipated the earnings, I would say. Partly why we're seeing this huge pullback. Earnings yesterday, and of all people that caught it, or 70 some people that watched the video, there's only one person that caught it. Good job. It was a Microsoft earnings, and today's earnings were the big ones were Facebook, Apple, and Tesla. Facebook was a beat. Tesla was a miss, and I believe, let me quickly check this here. Yeah, but by the way, this is the chat room, and you can find all sorts of information on here. If you are interested, make sure you check out our website at totalcontroltraders.com. So, Apple was a beat, but not by much. So market is still pulling back after hours. Just made a slight lower low, nothing significant. We are seeing a bull divergence on the hourly forming, a very clear bull divergence. Where is that low? From here, here. So we'll likely make a lower high in the after hours. However, do note that this move today has now marked the daily trend reversal. we have closed as a lower low for the first time in nearly 3 months. Okay, Nas broken over the GP already from this last impulsive move. First time breaking over GP. Last time we bounced from it. So this is the first break of GP. However, this is after hours, so we could very well just bounce from here. As of yesterday, we closed right on the top of GP. So first, today is going to be key for those who haven't exited yet on your bull positions. Market trend has reversed. Nas has not yet reversed yet. Dow, clearly bearish. We can see lower high, higher low, double top basically, then now a lower low. Okay, clear trend reversal on the Dow. IWM, Russell, still bullish, still in the lower high, and just broke under the daily 8 for the first time since beginning of January. US 10-year over 2-year, still rejecting from this zone here. This is the upper side of the rejection, or the upside of a resistance zone, as well as the trend line going back from here to here. And we are unable to break over. Now we are seeing a little bit of a bear action. Gonna want to see whether it holds on this lower trend line here. If not, would anticipate to come back down to this lower trend line. Gradually would not be something. Bond yields do not move that crazy, so would be a slow movement. First pop on VIX in a long time. Remember how I mentioned that as long as we hold this 20 to 21 zone, we will be seeing a pop. And today, to my belief, is gonna be the start of the pop. This was a fake out, but today we closed at high. And earnings, the big tech earnings that everyone was looking very bullish on. And remember guys, when everyone's looking one way, market tends to look the other way. So always keep that in mind, and that's why I've been hammering the fact that if you're in bull positions, make sure to pick up some hedges. It does not hurt to have some hedges. It will help you hold on your bull positions if anything. And in the case that market does reverse, like today, you will not be scared to rush for the exit. At least it'll balance out a little bit. So VIX is popping, and if you look at this wedge, let's make it a bit clearer here. This big wedge, it's been ongoing since April 2020. Okay, we've been rejecting from that zone, faked out in October, and for the first time we're breaking over it. So likely to see a follow through. There seemed to also be a trend line on this daily RSI. So anticipation would be for the RSI to come up to here. Okay. And US dollars, we're seeing that pop. We are seeing that pop. This scenario is less likely now. We're more likely to see something like this. Go up to the trend line. Could very well just break straight over it. But considering the market needing a higher low, likely to do a back test before a break over. Bitcoin still in that channel. Daily getting grinded down by the daily 8. Holding the GP. Potentially losing it in a day or two. But over the long term, weekly, still a bull flag. Bull flag holding the weekly 8. Weekly 8 and GP is your guide. If that's lost, we're looking down. Next weekly support is around 1966, which is quite a bit of ways away. 35%. $10,000 worth per coin. Alright. let's get into the tickers. The hottest tickers. First one, Tesla. We're gonna have to look at the after hours actions because earnings was today after hours. And look at that. If you play bear, congrats. Hopefully no one held bull, because if you look at this, trend was reversing already today. We were making a higher high, higher low, lower high, lower low, lower high, another lower low right before close. And as the earnings came out, we had an immediate drop of 7.5%. I believe we bounced, yeah, from right below 800, 798. We basically dropped from 880 to the high of today to the low of aftermarket. That's 10% drop. After hours was 8.7% within minutes. And now we're seeing, we saw a bounce, got sold off. Now there's further bear action coming into play. This, in my opinion, is likely to drag out for quite some time. We will be breaking under the daily 8. Actually, we already did. The blue line is the after hours, 820 as of now. We are well under the daily 8 already. And this is likely to drag out either sideways action or a consolidation for quite some time. Will not be interested in playing Tesla for us until this plays out. Next, Apple. Similar idea. We were seeing a nice hold on this trend line up until after hours earnings, and we just completely broke down. Broke under the trend line, broke under through everything. Support is gone. Originally saw a slight hold on the support, now we're under it. And earnings was a beat. Was not nearly as much of a beat as market expected. Remember guys, when if you're playing earnings, don't just look at the consensus, the analyst consensus, okay? The market generally, if the analyst consensus is expecting a beat, market generally would price in a further beat. If analyst consensus is expecting a loss, market would generally expect further loss or potentially less loss. It's never going to be that exact number. So just know market is smart. Things are priced in before the events. Okay. And that's why even though on the positive earning, same with Facebook, we are seeing a sell-off. Aside from the fact that the market has ran for 60 days straight. 60 trading days straight. All right. Next, Amazon. Sucks for Amazon. This play was going to be nice. We are holding the low fairly decently after hours. It's just the timing of it. I mean, we were holding up so well here. Could very well just broken over if the market would kept on being bullish. Easily broken over it. But because of the market correction today, or consolidation today, wouldn't call it correction yet. I believe it's 20% or higher as correction, 10% or higher, something like that. We did drop for 3% in the market today. So most of the major techs, especially NAS related, QQQ related, all dropped. Okay, we are holding decently. Gonna have to see a reaction at this first inner trend line, then a reaction at the lower trend line. If we do touch a lower trend line closer to the last support, we'll be taking an entry. Liking the setup, long-term wedge since September. That is what, 4 months? Yeah, 5 months? 5 months now. 5 months sideways action. When this breaks, it's gonna have really nice move. Remains on top watch. Next sticker, PLTR. One of the rare, one of the few, not rare, one of the few extreme bullish tickers, partly because of Wall Street bets. And if you look at Wall Street bets, there's a few tickers, GME, AMC, Nokia, BlackBerry, PLTR. I believe those are all within the top 8, and they basically just all ignored market action today. Look at the first candles, or the first. Let's go 30 minutes. Market opens, boom. Market's going down. We're still going up. Don't care. Ran for 36% today before starting to see some pullback. As long as my thinking on this is, as long as Wall Street Bets is still on it, bull action will remain. We are seeing nice upkeep of bull volume. No reason for exits. Use that 88 as your guide. Next, zoom. A little bit more bearish than I would have liked to see. So exited this trade. Loss on the loss of the previous support 372.03. GP is still below, so we haven't lost it yet. Technically, as long as GP holds, this inverse head and shoulder thesis, I would say, is still in play. However, with the reaction or what's been going on here, low volume, trend line shutting us down over and over, and now we're not even coming back up to touch the trend line. I would rather, especially given the market condition, I'd rather be a little bit more cash, major position is in cash kind of thing. And remember, guys, cash is a position. If you are playing with US, remember, US dollar is going up. Even if you're in cash position, say tomorrow, we go from current price to the trend line, your holdings, your portfolio is going to see a 0.42% increase if you live in Canada. And so cash is a position. There's no reason that you need to play every single move. Take some days off, on a day like this, market's gonna, as I mentioned, I'm looking at further downside, so this would likely take a little bit longer to work out, but just watch for that GP thesis still in play. All right, got 7 additional tickers to go through today. First one, GOOS. I have not looked at this chart since a year ago. What are we doing here? Let's see. Potential channel forming. Not very good at eyeballing stuff, as you guys can tell. Some of you out there are probably much better at this, just one look and you can draw exactly where the lines are supposed to be. And I'm somewhat of a perfectionist, so I like to get it exactly there. The closer you get it, the other reason is that the way I see it is the closer you can get the lines to match up exactly, the next time it comes into that zone, you can get your entries or exits a little bit more on spot. All right, potential channel forming. We're gonna have to see what this rejection brings us. High bull volume, earnings coming up, February 5th. That's a weekend some next Friday. And nothing notable. This could very well just be a run into earnings. Still a weekend some away though. So we're gonna need to, the volume is nice, but we are gonna need to break over this key resistance 36.75. If we're looking at a zone wise, this zone would make sense between 36.75 to 36.06. That is a key resistance zone to break. Then from there, key support to hold. This is lining up with anything. Somewhat, not really. Not strong support. So you don't really have support from the most recent 4 days move. So if it does start pulling back, likely to go straight past the GP. More downside than upside. There is a strong support here. So if we were to reject and continue to see follow through from the rejection, we'll be looking at 31.17 as an entry. Strong support lines up with GP. Next, FUBO. One of the other stronger charts today until end of day. 15 minute, just disregarded the market pulling back. Kept on running. We had a wick down below. Then we just kept on running. Straight past GP. But now we're seeing a clear rejection. On the daily, somewhat of a reversal candle. I can't remember what this one's called. Dragonfly? Yeah, I think this is a dragonfly candle. Rejecting from GP, high bear volume. Would anticipate further downside. We were extended from the daily 8. So let's see what the downside brings. Next, space. Those two candles look like, hey? Except this one's green. Congrats, Space Bulls. What a run today. This is 41% before a huge profit taking. Did not reach that 1 to 2 extension based off of this low to this high to this higher low. Did not reach that 1 to 2 extension, but went well past the 1 to 1.618. Volume climax day. We were extended from the daily 8. There could be one more day of, yeah, there can be one more day of bull action. You can see volume back here. So there can be, and we didn't close too far extended from the daily 8 yet. If tomorrow we see further bull action, close higher, that would be the volume climax. But today is very likely it already. At this point in time, if you're not in, there's no point risking. The risk to reward is just not there for trying to play further upside. There's more downside potential than upside, especially given the market conditions. Next, Workhorse. What an amazing ticker to play today. Congrats to all those that followed my trade on Workhorse from the trading community. We nailed it. That's what I can say. We nailed it. On this break of the wedge yesterday, we saw increasing volume, sustained bull volume. Bear volume came in, I'm unable to push it down. Great entry. Then from there, today we saw nice follow through with sustained increasing bull volume. Up until this trend line, perfect rejection. There was no reason to sell through the day. You can see this clear trend line, support back here. Something's off. My drawing's messed up. One sec, guys. I think it's somewhere back here. Yeah. Clear rejections. Zoom in for you to see. Rejection. Finally broke over. Then we came back test support. Support again. Triple, 4, 5, 6 times support. 7 support. Then we broke under. Then rejection. And clear, strong trend line to keep note of. And then today, as we came up to the trend line, perfect rejection off of it. There was no reason to sell from the break of the wedge all the way up to the trend line. So this was a perfect play. Hope you guys all nailed it. For those of you that follow my videos, this trend line I believe it was discussed yesterday or the day before. So should have been an easy play. Hope you guys nailed it. Next, CLOV. This was an amazing trade, but I do believe I lost sight of it. So rejection off the upper trend line, clear rejection, decent bear volume, coming right back down to the support zone. This, I'm looking at a long play, hearing good things about it. There is, not gonna be worried about this kind of candle. If you're in there for the long play and you just want to be a little bit more secure with your position, I would say use this zone as your support. If this zone is lost, actually that's pretty wide range of support there, probably somewhere along there. First, if this zone currently we're in is lost, we're looking down over here. Next, BNGO. Seen some bearish price action following the bear price action yesterday. Gap down, indecision candle. Still no reason to sell. Extremely strong chart. Still same thing. Use the daily as your guide. That is an extremely strong, extremely noticeable area now, with previous high lining up with the 88. That is your guide. Well, right below 10 bucks. Next, BBBY keeps on running. I'm hearing people are hoping for 100 bucks on this. Since January 7th, we have ran 200%. Just blowing through all sorts of targets. We've on Friday, the 25th, Monday. Yeah. Came up to the 1 to 2 extension, clear rejection, straight bounce from the daily 8, seeing a gap up and run today. This is unbelievable. This ticker is unbelievably strong. If anyone knows the reason for this, and is there news behind it? Is there a new partnership? Like, I don't understand Bed Bath and Beyond. It's a retail and online shopping store, right? So there has to be a reason for the way I'm seeing it. There has to be a reason for it, whether if it's a news partnership or even just like Wall Street bets. What's going on here? Someone tell me. Someone make a comment, please. Anyways, that's it for today. Hope you guys enjoyed the video. If you like the contents that I'm putting out, and if you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos. Also check out our website at totalcontroltraders.com. That's totalcontroltraders.com. Currently we're still giving away that limited quantity of 10. I haven't checked how many is left. 10 memberships to a 7 days free trial to our trading community. And the website has been updated with a little bit more detail to give you insights on what exactly that means. So make sure you check it out. Stay safe. Hope you guys stay safe and be in control. I will see you in the next video. Thanks for watching, guys.